market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So European stocks heading for another all-time high after a strong session in Asia, following a two-day sell-off. Precious metals have also bounced off their lows, with silver jumping more than 7%. Meanwhile, stocks in India have soared after a surprise deal with lower U.S. tariffs. So let's dig into what's going on with Jimmy Muchechetere, a senior equity analyst at Investec, and Mann, global chair of Baker McKenzie, one of the world's biggest law firms, which of course advises clients on compliance, trade sanctions, and export control. So thank you both for joining us. Jimmy, let's start with you, because yesterday was a big markets day, right? And it's kind of everything was going not in the right direction, unclear what the change of sentiment was. Could be, some buying or some volatility, like speculation coming from China. But what is the market focused on today?
The market today is definitely focused mainly on earnings, and what we got yesterday was the shift in sentiment with the big ISM manufacturing print, which meant that the market now started to look a little bit more positively. And then you add earnings, which have been very, very strong. You mentioned Palantir just now. And we've had earnings from some of the big Magnificent Seven stocks, all very good. In fact, earnings thus far, 70% beats as we report today. So the market is now shifting its focus away from the negativity, if you like, thanks to the ISM print manufacturing print yesterday.
It's very clear that there's a lot of volatility, and so what we try and do on the show is we're kind of at the crossroads of markets, geopolitics, and everything that's going on, including trade. I mean, your clients must be feeling nervous. I know it's longer-term decisions, whether it be advising them on M&A or not, but what's the sentiments among clients?
So I think, Francine, the only constant is change. We've seen that over the last year, but it's intensified even over the last few weeks. If you just think of Venezuela, Greenland, the Middle East, potential for peace in Russia, Ukraine, and then also what has played out over the last 24 hours in terms of, the de-escalation of the tariff war between India and the US. So yes, it has been tough for businesses to navigate that. They can get their heads around change, but it's the unpredictability that could be challenging.
So are they behaving differently? Is there M&A coming, or are they holding back until the markets and Jimmy settles down?
Yes. So it's one of those scenarios where I think businesses absolutely have been looking at the longer term to develop a bit more resilience and robustness, but they also need to be able to respond to the short-term shocks with a bit of agility and nimbleness in a way that they never had to do. Yes, they're trying to wait for the dust to settle a bit, but you can't wait for too long as well, because I'm not sure the dust will ever settle. Yeah,
and Jimmy, what's interesting is that actually, despite all of this volatility and shocks that we've seen, or the threat of shocks, actually the economy's okay. 100%. Fundamentals are okay. Earnings are okay.
100%. And our work suggests that we've got a lot more tailwinds than headwinds. This year, we're going to get the one big, beautiful bill. It's a big stimulus in Germany. We're going to get a big stimulus as well. And then we've got rate cuts potentially coming through. We've got deregulation, big IPOs, OpenAI, SpaceX, etc., that are going to come down the pike. And so, there are a lot of positives. And the market in the short term has been volatile because of a lot of positioning and leverage dynamics. But once that moves away, then we'll see the market concentrating on the positivity.
There was a bit of an odd phenomenon last year, Sonny, where a lot of the chief executives said, well, I'm fine, but actually I worry about my neighbor because their client book or their orders aren't as strong as mine. Do you feel that also going into 2026, or has the level playing field kind of changed a little bit?
I think it's changed, and it's changed somewhat irreversibly as well. It's the combination of the volatility. It's the fact that there is a lack of certainty in supply chain as well in your customer base. And I think what businesses have really had to do is diversify. They've had to diversify their customer base, their supply chain, where their funds sit, where their data resides. So across the board, we've seen pretty strong diversification from businesses as a strategy to respond to the volatility.
What's your take on kind of that sentiment from chief executives that could also, translate into the balance sheet?
It's guarded optimism. So last year was characterized by a lot of uncertainty relating to policy, regulations, tariffs. A lot of that is going away this year. And so what we've seen in terms of guidance for 2026 is guarded optimism. A lot of, we like where we are, but, we can't really say it's over. But, if all those headwinds disappear, then, we're going to have a fantastic year for many of these corporates.
Jimmy, what do you do with tech? I know you're you're a bit of a specialist when it comes to healthcare, but I was going through the numbers of what's needed to actually, have data centers into space that Musk now wants to do, which is why he's combining xAI and SpaceX. Yeah. But does that give you worries? Because even if they find the money, if something goes wrong, we don't know what the consequences
it gives us pause. I think we are at a beginning of a new technology paradigm, and so there needs to be big risks taken to invest. I think what is going to worry the market is how do you finance all this? Yesterday we saw Oracle coming with a big plan to raise debt, 60 billion, I think. That's going to start worrying the market. Thus far it's been fine because they've been financing that using their own cash flows. But that's going to be the issue. What we're doing with tech at Investec is we are saying where are the flows going currently? So they're going into the semiconductor land, they're going into memory stocks. That's where performance is to be had in the short term. So infrastructure plays, and that's sucking money away from the software side of things. But in the long term, we think there will be winners and losers, and I would think some of the software names will be among the winners.
Okay, let's also get more on that surprise deal to lower U.S. tariffs on India. In a post of Truth Social, President Trump said tariffs on India are being cut from 25% to 18% after the Indian Prime Minister, Narendra Modi, agreed to stop buying Russian oil. Well, Dan Strumpf, Bloomberg senior reporter, joins us now from New Delhi. Dan, is this deal really a reset between U.S. and India?
Yeah, thanks for having me. In many ways, it really is a reset, Christine. The post from Donald Trump that you just showed, it's actually a little bit misleading. Tariffs on India from the U.S. were actually at 50% for the last 6 months or so. Starting in August, the U.S. imposed these rather punitive tariffs on New Delhi over its purchases of Russian oil. So those 50% tariffs put India's rate at really among the highest in the world. And this was really a very much a sore spot between relations between the U.S. and India going back for many months now. So bringing tariffs down from 50% to 18% is really a major breakthrough, and it's being heralded really quite widely across India today. You're seeing a lot of happiness among investors. You're seeing a lot of happiness among business leaders, and as well as exporters who were hit quite hard by these tariffs, who were sending exports to the U.S.
Dan, thank you so much. Our Bloomberg senior reporter, Dan Strumpf. Now let's get back to our stellar panel with Jimmy Muchechetere and Sunny Mann. Sunny, you've just come back, actually, from was it a state visit of Keir Starmer to China? Huh?
Yes.
Is it your first? I imagine it was quite exciting because he brought a big delegation.
Yeah.
And, your thoughts on that?
Yeah. So I was out on the India delegation as well with the UK government, and yes, I did join the trip out to China. Look, I think what it emphasises is the importance of dialogue. Yeah. So the fact that we have the UK government having a dialogue with China about those areas where they can work much more closely together, it's good for the global economy because it provides a sense of stability, but it also then starts giving a bit more confidence to businesses that are looking to explore these new trade corridors. And whereas there may have been a degree of nervousness in the past around those opportunities, I think it does give a little bit of a boost for businesses to start exploring that UK-China corridor as well.
Did you ever feel like the UK had to choose between the US and China, or can you do both? I mean, trade, we're almost starting from scratch, right? These are new rules that no one really has a playbook for.
Yeah. So I think it's probably too simplistic to say that it was a binary choice, because even if you look at the US, as I understand it, the US administration is in dialogue with the Chinese administration. When I was out in Davos, they talked about relations with China being stable. And, there was talk about President Trump heading over to China as well in April. So the fact that we've got even the two largest economies finding that area of commonality, I think is good news for the global economy. It's good news for businesses. And so in that sense, for other economies as well, I don't think it is a binary choice of one or the other. It is possible to have good relations with both.
How do investors look through this? I mean, again, I guess it doesn't make them feel bad, but it's not really like a catalyst, or is it?
It is a catalyst insofar as it removes a headwind. So one of the companies I cover, for example, is Deere Technologies, which has been suffering because U.S. farmers have not been able to export grains into China. Yeah. And that is dependent on a deal being made between the U.S. and China. Another interesting fact is that In the past, China used to be viewed as a copycat in healthcare, but what has changed is now they're a big hub of innovation. So Keir Starmer, during that delegation, actually announced a deal where AstraZeneca is going to spend $9 billion to buy a Chinese biotech company. So we're seeing a lot of these deals happening. So it's the dialogue that Sunny has been talking about is actually very important because it's unlocking opportunities in the corporate sector as well.
And so do your clients take advantage of that on a short term, or again, do they need to wait to see whether things stabilize in a couple of quarters?
So I think where you end up with a concrete free trade agreement, as it was in the case of India, that gives you more concrete opportunity to pursue, particular scenarios and investment opportunities. So, for example, if you look at UK-India, I do see an opportunity for a growth spurt there. Really good news in terms of what we saw overnight with US-India as well, the fact that you've got the two pretty major economies that have started creating that trade corridor and boosting it again is good news for business. But also, I think with India, what is particularly encouraging there, we've seen a business and investment-friendly budget come out, combined with the fact that the Indians are also diversifying their trade strategy with Mercosur, with EU. So it's exciting times for Indian businesses as well.
So, I mean, for many years, actually decades, I guess English and American law firms were seen as best in class. Is it still the case? It feels like, the UK, I don't know if this government is supporting UK law firms to the degree other governments have.
Yeah. So the fact that the UK government did invite law firm leaders to join on the delegation, I think it's a good sign. In discussions I've had with various UK government representatives, they talk about the importance of the rule of law. They talk about also the importance of English law as an export of services as well. So I think the UK government still sees that value in what the legal services industry brings to the economy.
And what do you spend most of your time on as global chair, given all of the uncertainty, all the client-facing, but also, I guess, negotiations with governments? Sure.
So two key things are commonly coming up in client discussions that I'm having. Absolutely, it's a geopolitical disruption, but it's also how to navigate the AI changes and developments that are coming around the corner that's going to impact every industry.
OK, thank you both for joining us. What a day. I feel like every day we see what a day, but one day we're going to have a more calm discussion about the future. Jimmy Muchechetere, there, a senior equity analyst at Investec, and Mann, global chair of Baker and McKenzie. Now, coming up, Musk's mega merger, the world's richest man, combines his space and AI companies. We'll have more on that next. I was looking through the numbers. They're absolutely huge. This is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, Elon Musk is combining SpaceX with his artificial intelligence startup xAI in a deal that values the combination at $1.25 trillion. Now, the acquisition was announced in a statement on SpaceX's website, confirming our earlier scoop. Well, joining us now is Neil Campling, Bloomberg senior strategist. Neil, I mean, the numbers are incredible. And if you look at why Musk is trying to do it, it's probably just because he needs capital. And so his entities can't really do it alone.
I think you've summed it up perfectly, to be honest with you. I mean, if we look at it, X combined with the AI originally because they'd run out of cash. Now, xAI, Bloomberg Intelligence actually had put out a piece of research just last week estimating that xAI lost $11 billion last year. And to give you a context for that, in the September quarter of last year, they made just over $100 million of revenues. So I think we could probably say that xAI was running out of cash. And so the combination kind of, it kind of muddies the waters somewhat in terms of where, which business is doing what. But the idea of these orbital data centers, which was Musk's great vision in the statement, to me sounds like it's going to be incredibly expensive, which is probably why we're still going to go ahead with the IPO later this year. And,
I have a million questions on, valuations and actually just the money they need to raise. But I also need to ask about Palantir, because that share price is gaining some, 11% after revenue beat estimates. I mean, does it signal that AI demand is to the sky?
I suppose it shows the narrative, the thematic that there is AI demand and it's very strong growth in pockets of the AI spending. I mean, they reported 60% revenue growth for the quarter, the fastest revenue growth they've had in 10 quarters. It's accelerating significantly, and they're guiding very strong growth. Yeah. I think what was quite amusing in the actual statement was what the CEO said. Yeah. And the CEO described the results as a cosmic reward for believers, which, you know, ticks the box, I suppose, for the Momo investors, the retail investors, the YOLOs, the AI. So it's, you know, it ticks lots of boxes, but at 56 times forward price sales, there's a big valuation it has to live up to still.
I love a cosmic result. Thank you so much for joining us. We'll need to spend a bit more time on this because I'm always looking for cosmic results. Neil Campling, Bloomberg senior strategist. Now, Oracle has garnered record demand for a $25 billion bond sale, helping to ease fears over the amount of debt being used to fund AI investments. Oracle's debt had been trading like junk for weeks, but its announcement on Sunday that it will raise $25 billion of equity in addition to debt this year has reassured investors. The company is building additional cloud capacity to meet demand for customers, including AMD, Meta, and NVIDIA. And the eye-watering valuations of AI company has some investors questioning whether this is the start of a lasting transformation or simply markets running too far, too fast. Through 2026, tech companies are gearing up for sustained resistance to the EU AI Act, which some argue could stifle innovation. Well, joining us now is Christian Kleinerman, Executive Vice President of Product at Snowflake. Christian, thank you so much for joining us. Now, you recently announced an open AI partnership. Are there more coming with other LLM providers?
Thank you for having me, Francine. Excited to be in London. And we are very excited about the partnership with OpenAI. But what we think about at Snowflake is we want to give customers choice for them to bring AI, to combine it with their data, and make sure that governance and security are maintained at all points in time. So we're very, very excited to bring OpenAI's models natively into Snowflake.
So are you seeing any demand for the Mistral models? And actually, Christian, how far behind is the EU or Mistral in this LLM race?
Yeah, definitely. We also have a partnership with Mistral. We've been integrating their models for a number of years. Many of our customers, especially here in Europe and in London, leverage their technology, and we, again, optimize for choice for our customers.
What are you most excited about? I mean, you sit really at a kind of the intersection of everything that's exciting and somehow also needs quite a lot of investment. How do you see the next 12 months going?
I think one of the shifts that we're seeing is AI is going from experimentation and trials to let's put it in production. And that's what we are most excited about, helping organizations actually find use cases, put them into production, and most important, which is what this is all about, deliver productivity enhancements. And we're seeing story after story where something that used to take hours, now it's taking minutes, from days to hours. And that is the exciting piece. The productivity gains are real.
Where do you see actually the best use case at the moment? Is it specific sectors where you can actually see the returns more quickly?
I think there are two categories. Of course, everything around accelerating technology, which is where you see coding assistance. That is definitely an area that you are seeing material benefits. We have introduced something called Cortex Code, which we're doing the same type of productivity enhancements for data operations. So that part, technical acceleration, is very important. But the other piece is democratizing access to data. One of the key use cases around customer experience. And we have technologies at Snowflake to help organizations more easily and more seamlessly get value of the data, get insights out of the data.
Christian, talk to me a little bit about the EU AI Act. Have you held products back because of this act?
Not at all. Not at all. Actually, a lot of what the EU Act is trying to do is helping organizations understand what are the safety controls they need to put AI into production. And that is something that runs through the core of what Snowflake is. From the very early days, we've been focused on how do we help our customers comply with a variety of regulations. And what the EU AI Act is doing is exactly that for AI. It runs through all of what we've been doing with AI itself, things like observability, debuggability, auditability. All of that is part of the core promise. So we very much welcome the regulation, and we are very excited to be able to help customers comply with that regulation.
So, Christian, first of all, what do you think Europe needs to do today to stay more competitive on the AI? Are they doing a good enough job? And are they just getting beat up because there's no big AI company like the U.S. has?
I don't think that there's any foundational difference. My advice to everyone is find narrow use cases and go put them in production, experiment, see the benefits, see the productivity enhancements, and then move on to the next use case. I think what we want to encourage companies is avoid this large AI strategy that it takes on forever, and that's when we say, let's get out of this testing and trying things out. Yeah. Find a smaller use case and go live, and once organizations see the benefits, there's no going back.
I mean, I know you have clients, for example, like Jet2 or also the British roadside assistant company, RAC. I know you have test case or user scenarios where they've actually been able to improve their service. What's the wackiest way that one of your clients improved with your services?
I don't know about wackiest, but what Jet2 is doing is super exciting. They take over 2,000 call center records every single day, and they use Cortex AI from Snowflake to analyze and understand that data. Same thing with RAC. They are assisting their customer service agents with information at their fingertips to make better decisions, better recommendations. So I don't know that they're wacky, but they're very productivity driven.
And I know, basically, to your point, this is, AI being used now on an enterprise level. I still hear, Christian, from a lot of chief executives and saying, well, I don't want to miss out, but I don't really know what model sticks, and so I don't also want to overpay or overspend now if something better is out there in 1-2 years. Like, how do you respond to that conundrum?
That's almost music to my ears, because a lot of what we've done, this is the story of Snowflake in general, help do R&D and investigation on the behalf of our customers, and the same thing is true for Snowflake. I do agree that it's hard to predict how AI and specific models play out, because we see a constant evolution and improvement between one and the other. What we bring with Snowflake is choice, where customers can easily say, I'm going to leverage model A today, maybe I'm going to use model B tomorrow, or for a different task. And again, the most important thing is all within the security and privacy constraints and guarantees of the customer. So choice is important, and the ability to shift from one model to another one is a core value proposition for Snowflake.
Yeah, how is agentic AI being used? And Christian, is that just going to be overwhelmingly different in 2-3 years?
I think it's very difficult to make any 2 to 3 year projections in this space, because things are moving dramatically on a weekly basis almost. But I do think that the notion of going from being able to retrieve insights, which is where we were mostly a year ago, to agentic use cases where agents are starting to make decisions, take actions on our behalf, that is something that we're seeing today from organizations. So it's only not only just get an insight, but go and take a decision, maybe notify someone. That is happening, and I think we're going to continue to see sophistication on the types of actions that these agents can take.
Christian, thanks so much. Christian Kleinerman, Executive Vice President of Product at Snowflake. Up next, we discuss geopolitics. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Markets rebound. Gold and silver bouncing off their lows. The Stoxx 600 heads for another all-time high. President Trump announces a surprise deal to cut tariffs on India, saying the country has pledged to stop buying Russian oil. Plus, a new frontier for artificial intelligence as Elon Musk merges SpaceX and xAI with a view to putting data centers in space. Now, the U.S. President Donald Trump says he expects talks with Iran over a new nuclear deal in the coming days. It comes amid a flurry of diplomatic activity aimed at averting war between the two countries. With us now is Bloomberg's Abir Abu Omar. Abir, thank you so much for joining us. Look, geopolitical tensions are definitely on the rise. And with Iran, we're not sure. We understand that there's a U.S. aircraft carrier that's now retreated, but I guess the risk is still there.
Yeah, absolutely. The risk is still there. But I mean, what we have for the time being is that President Trump said that he's going to come to the table with Iran Iran sometime this week, the Iranians said that they're happy to pursue diplomacy as well. So we know that the Iranian president said he wants diplomacy, but that diplomacy is not compatible with threats. It's not compatible with the U.S. approach. But we're still expecting, both the Iranians and the Americans to come to the table for negotiations over what is primarily a nuclear deal, Francine. When it comes to oil prices, I mean, that is the biggest sort of risk in the region. These geopolitical tensions have a major impact on oil prices. But what we've seen over the past couple of years is that there's been this decoupling trend, if you were. So actually, since October 7, 2023 until last year, oil prices have fallen by an average of $20 from $85 per barrel on average to $65. So that trend is expected to continue, according to our Bloomberg economics team, who expects, the geopolitical tensions are not going to have a major impact on Brent, which is at $66 a barrel. So they can be true.
Abir, thank you so much. Abir Abu Omar there with the very latest on the price of oil. Now, for more on this potential nuclear talks with Iran and U.S. foreign policy more broadly, let's bring in Charles Myers. He's chairman and founder of the geopolitical risk firm Signum Global Advisors. He was also previously vice chair of the investment bank Evercore and advised Hillary Clinton and Joe Biden during their presidential election campaigns in 2016 and 2020. Charles, thank you so much for joining us. I mean, it's unclear where we are in the Middle East right now, what the Trump administration, calculations are when it comes to Iran. What do you think they should be looking at?
Well, I think President Trump is keeping the military option very much open and on the table. But like with previous situations in foreign policy, his instinct and his inclination is to try to negotiate first. And we saw that in Venezuela before taking out Maduro, for example. We see it in other parts of the world. And what he really wants is Iran to come to the table in a serious way and agree to a new nuclear deal, and is giving enough time for that to happen. There have been rumors of a military strike on Iran now for the last 3 or 4 weeks, almost every couple days. Our call has been that President Trump first wants to give Iran more time to come to the table, get to a real deal. And if that is not possible in the next 2 or 3 weeks, then I would say the military strike option is absolutely viable and on the table.
Charles, what happens in case there's a military strike? I mean, this would upend, peace in the Middle East, and I'm sure that Turkey, Qatar, and others would quite take issue with this.
Yes, absolutely. And I think one of the reasons that, again, the Trump administration is taking their time on this is that we needed to pivot some of our military hardware and personnel from off the coast of Venezuela and other parts of the world over and back over into the Gulf in case we have to strike Iran and Iran retaliates militarily, which they are likely to do. They're likely to hit U.S. military bases in the region. They could hit oil facilities in Saudi Arabia, in the UAE. And so I think the Trump administration in taking their time is preparing for all options, including that possibility of military retaliation. I think in the end, though, what we would find is it would be a somewhat limited military response from Iran. The regime is incredibly weak. Israel took out their air defenses in 48 hours. So it wouldn't be no response. But in the end, if we do it, I think it'd be a pretty successful strike on Iran. Lastly, if we get to the military strike option, expect it to be a big one. It will not be a small, short-term surgical one like the last hit that we did on their nuclear program.
Mm-hmm. Charles, give me a sense. So you're leading a big delegation also to Caracas in Venezuela to try and help, I guess, with rebuilding of the country in terms of infrastructure, is my understanding. But overall, what is the U.S. policy right now in countries like Venezuela, potentially the Middle East, but also elsewhere? What have we learned since January 1st of this year?
Yeah, absolutely. So I'll come back in 1 second on our trip to Venezuela. But to answer your question more broadly, in the last 12 months, the Trump administration has pursued a much more assertive and I would argue aggressive foreign policy than most people expected, in part because he ran as an isolationist and said he would focus on America first. And so what we've done already is remove a head of state in Venezuela. We threatened Greenland. We threatened Panama, early in his administration. Now some of the military options in the Middle East. This is a very assertive American foreign policy. And I think that in the end, the American president doesn't have the luxury of being isolationist, is what we've learned in the last 12 months. And as part of America First, that also includes not only domestic priorities, but also includes national security. It includes everything from protectionism through to technology independence, energy independence, and ultimately things like geopolitical considerations. So my point is that going forward, we should expect, I think, this administration to continue to be far more assertive in foreign policy than people expect. America First includes national security. On Venezuela, now that Maduro is gone, we're taking investors. Will be the first foreign investor trip to the country. We thought we'd have 20 investors. We have interest from 100. We're now converting it to a conference in Caracas, March 22 to 24. We're going to meet with President Rodriguez, energy minister, all the top officials to look at reconstruction opportunities. I'm very optimistic on the outlook for Venezuela, and I think that foreign investment will be central to the economic success of Venezuela now that the United States is actively involved, engaging with the country.
Charles, when it comes to U.S.-China relations, I mean, I know there was this, semi-surprise deal on tariffs with India overnight, but are you expecting the two superpowers, U.S. and China, to stabilize their relationship?
I do. I think, again, it's another example where President Trump prefers negotiating first. It's always his first instinct is let's see if we can get to some kind of negotiated settlement or negotiated agreement. And with China, I would argue U.S.-China is in a better place than it has been in over 15 years, meaning that we de-escalated with China on tariffs. 10% on the fentanyl tariffs have been scaled back. Secondly, we have a soybeans for rare earth steel. Third, we've relaxed some chip exports. And President Trump is going to meet with President Xi in April. This is progress in the bilateral. We still have huge challenges. It's still our biggest national security threat, China, but President Trump and his administration is making progress on very important issues with China, and it's in the interest of both countries to do so.
I mean, what's happening domestically at home? I know there's been a lot of concerns over the methods of what ICE has been doing, protests after also some of the killings. We also understand overnight that President Trump wants $1 billion from Harvard University. I mean, is that a strategy?
I do think it is a strategy. This is an administration that has shown that it is willing to use the full force of the Department of Justice and other instruments of power to go after individuals or institutions that it is not happy with, whether it's the media, whether it's our law firms, whether it's our universities. And this is the newest thing overnight against Harvard, this $1 billion ask for damages is just part of that. And I think on the Harvard case specifically, it's because Harvard won a case back in September last year that restored the federal funding to the university. And so I think this is round two from the administration. But ultimately, where we come at it is what is the institutional damage, partly to answer your question, that's being done. And foreign investors are concerned about this institutional damage, whether it's Fed independence, attacking universities, et cetera. And I don't think it's very constructive. I think Harvard is right to fight this. I think they will absolutely fight this to the end. In the end, I suspect Harvard will win this.
How's the president doing at home in terms of popularity?
Well, his approval rating has sunk in part on some of the immigration tactics. Affordability is the main issue in our upcoming midterms in November. And on that issue, with the exception of the price of oil and heating oil, every other product in the affordability basket is up over the last 12 months. So I'd say it's going to be a pretty tough midterm for the administration. I think the Democrats will take the House by a net 20 seats. The Senate probably stays Republican, but even the Senate might be in play. When you come into office with such an aggressive set of policies, particularly on the domestic front, and I think, again, the tactics around immigration is what has hurt the most. The president's approval rating, where he has lost the most ground in the last 12 months, is with Hispanic voters on immigration, but also with young voters. So there's still time to turn it around between now and November, but I'd say it's looking like a pretty tough midterm for the president and the Republicans.
And Charles, are the MAGA base still firmly behind him and the Republican lawmakers, or are there frictions on certain points?
On the surface, they're absolutely with him, with one or two very notable exceptions like Marjorie Taylor Greene, who broke with the president over military force, but also the Epstein files. But I would say, going into the midterms, the MAGA base will absolutely stick with the president. They will turn out with the same energy that they have for him in the last three elections. I don't think that's the issue. Where we may see, to your question, some breaks in some of his support is elected Republicans in swing districts into the midterms who may need to break with the president just in order to save their own seat. We're not seeing a lot of it yet, but I think we'll see more of that as we head into November. And it's important. You know, we don't have a lot of guardrails that are working in the U.S. today. We do need a much more assertive Congress as a co-equal branch of government. I think it would be a good thing.
Charles, thank you so much for joining us today. Charles Myers, their chairman and founder of Signum Global Advisors. Now, fresh record highs for European stocks as gold and silver are actually rebounding. So let's take a closer look at the markets with Christine Aquino, Bloomberg Markets live managing editor. Christine, so good to have you in London. So what's your take on this bounce back of precious metals?
Well, Francine, it definitely looks like a bit of a reset after a very, very turbulent January. And, you know, it's interesting because there was a lot of concern over the massive rally that we saw, especially over December and January, just because there were signs that it wasn't just haven demand. It wasn't just institutional demand. It was speculative investors, right? We saw a surge in ETF demand. A lot of those retail traders getting into the precious metal space. And so when you see that, it kind of turns the complex from something that functions as a bit of a safe asset, a bit of haven asset during turbulent times, to something that's more akin to a risk asset, right? And that is concerning just because then that just narrows the path for investors when things go wrong. Where else will they go? And that's kind of the breakdown that we saw toward the end of January when risk sentiment was taking a bit of a hit. The first port of call for investors to sell was the precious metal space. But now, you know, it's a new month, new themes, and
problems. What problems? Everything's
exactly.
fine. And then we had that strong U.S. manufacturing data, so everything's fine in the markets.
Yeah, I mean, yeah, it's very, very interesting, right? I mean, there is definitely at the moment kind of a trend in the U.S. of survey data pointing to stronger than expected indicators, particularly in manufacturing, but even the services, and then a bit of a rift between that and the hard data that we're seeing, particularly in the job space. Still signs of a soft labor market. And so you would understand then, this is the picture, for instance, the Federal Reserve is looking at. You'd understand that's why probably Fed Chair Jerome Powell struck quite a balanced tone at his last press conference. And you do get the sense that the committee probably wants to maintain some optionality, especially as we're about to undergo a leadership transition later in the spring.
Christine, thanks so much. Christine Aquino there, managing editor of Bloomberg Markets Live. Now, months of political upheaval in France are drawing to a close after Parliament adopted a budget for 2026. The Prime Minister, Sébastien Lecornu, survived 2 no-confidence votes after making concessions. Let's get more from Jean Dalbar, economist at Bloomberg Economics. Jean, thank you for joining us. So first of all, what concessions were made, and is Lecornu definitely safe for now?
Well, I think so. I mean, he made huge concessions to the center-left to get its budget passed, and it was a success. So I think it's pretty safe for now, and I even think this is something which the market is not pricing in, that there will be less political uncertainty for close to 1 year time ahead of the next presidential election in 2027. So huge concession, especially on taxation for firms, but at a price which is positive for the short term of the French economy, which is lower political uncertainty.
So, French inflation also unexpectedly at a 5-year low. Who's that good news for?
I mean, we do think that inflation print reflects temporary factors like sales that were longer to display in January this year compared to last year. So we still expect inflation to edge higher slowly over time and to rebound toward like 1.5% toward mid-2026. So I would say it's not like a big deal, a big event. It's a downward surprise, that's sure, but it's not a big deal because the factors that were driven inflation this month are temporary in our view.
And Jean, what's the outlook for deficits and the French economy?
So thanks to that budget, we do think the deficit will narrow to 5% of GDP in 2026 from 5.4% in 2025. So it's still a sizable consolidation because that reduction of deficit needs to offset an increase in interest spending and an increase in defense spending, which is pretty important. We're talking about plus 6 billion euros in 2026 for the French military budget. So it's still a sizable consolidation, but still the activity is resilient, at least better. The French economy is doing better than expected, has been doing better than expected in 2025, and we expect it to grow by 1.1% in 2026, mostly because the political uncertainty will recede, and that will support activity and investment of French firms.
Jean, thank you so much. Jean Dalbarder, economist at Bloomberg Economics. Now, coming up, stellar sales of the Switch 2 are undermined by rising memory chip costs. We'll dig into Nintendo's earnings next. And this is Bloomberg.
The Bank of England makes its next interest rate decision. As inflation rises and the labor market cools, investors will be looking for clues from Governor Andrew Bailey on the pace of rate cuts for the year ahead.
With every cut in bank rates, how much further to go becomes a closer call.
Tune into Bloomberg for live coverage of the BOE decision and press conference. It all starts Thursday at 12:30 p.m. on Bloomberg. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the chief executive of ARK Invest has said Trumponomics is like Reganomics on steroids. Speaking on Bloomberg ETF IQ, Cathie Wood said the so-called debasement trade is misplaced. Wood also spoke about managing caps on ETFs.
We've been, I would say, from a compliance point of view, very careful. And then, our market makers are also trying to figure out what to do with this. How do they price in real time when at any minute something crazy could happen coming from one of these private companies? So there are some ecosystem challenges here.
Some ecosystem challenges, and it's something that we will be watching for. Certainly, it's an evolving story. Cathie, I do want to get your take on what a lot of people are calling the debasement trade, the effort to diversify beyond the U.S. dollar and U.S. dollar assets, moving to other assets like precious metals, specifically as a hedge against the dollar. What's different this time around from what we saw last year is that crypto is not part of this. It's not getting the bid from folks who are looking to diversify, who believe in this debasement idea. How do you think about that?
A couple of thoughts. I've been writing a lot about it recently. I think if you look over time, if you look for the last 5 years and you do a correlation between gold and Bitcoin, you'll find very little correlation at all. What you will see if you look back a little further, the last two major cycles for Bitcoin were preceded by the gold price increasing first. Now, I think what's going on, this so-called debasement trade, if I can just back up a little bit, I think is misplaced, and especially when we think about the dollar. If you put the dollar into perspective, you will see that over the years and in recent years, it's toward the higher end of its range against other currencies. And we think that the combination of deregulation here in the United States, big tax changes, especially for corporations, and very business and capital-friendly policies here in the United States, we think because of those, the returns on invested capital in the United States are going to go up relative to those elsewhere in the world. And this, we think, is because Trumponomics, if you want to call it that, is like Reganomics on steroids. If you look at what happened to the dollar under Reagan, it doubled. It nearly doubled. So much so and so quickly that we ended up in the Plaza and Louvre Accords to try and get it down. So I think it's a little misplaced.
Well, Cathie Wood, chief executive of ARK Invest, speaking to Scarlett Fu on Bloomberg ETF IQ. Now, Nintendo has reported a smaller than expected quarterly profit gain despite solid sales of the Switch 2. Now, that's adding to concern about the rising costs of memory chips. With us now is Nathan Naidu, equity research analyst at Bloomberg Intelligence. Nathan, I'm so happy to talk to you about gaming because my kids always ask for a console. So now I can say I've spoken to the experts and we're waiting. But no, I mean, on a serious basis, like what's behind the miss of Nintendo?
Yeah, I think a good point on memory prices, but I don't think that memory prices is going to affect Nintendo until at least 2028. But talking about this quarter misses, and it was actually the concerns were in software. Nintendo was not only selling less software, so the software unit sales across the Switch and the Switch 2 were 10 to 20% below consensus estimates in the last quarter in fiscal fourth quarter. Also, Nintendo was selling a lot more third-party software. And for context, Nintendo gets to keep all of the revenue from in-house games or first-party titles, but it only receives a platform fee in the case of third-party games, so that directly impact margin.
So, I mean, what are the implications of this memory chip shortage? Can people not get their consoles, or is it just meaning that they're going to be more expensive in a year from now, as you suggest?
I think you can still get your consoles, and the console prices will probably remain constant for at least a year. We actually see in the worst case, the Switch 2 margin could be wiped out, because currently memory prices, if that were to play out in 2028, and we think that's the case because Nintendo actually has stockpiled memory chips, and also it has stockpiled the Switch 2 console in the US. So that's going to help Nintendo hold down prices for the Switch 2 console until at least 2028. But when prices hit Nintendo bottom line and Switch 2, that's reducing Switch 2 margin potentially from about 11% to less than 6%. And then we still have lingering impact from tariff. Tariffs actually would affect up to 11% of Nintendo's operating profit. So if you take two and two together, that could actually mean Switch 2 margin getting wiped out down the line.
Are Nintendo's rivals facing the same problems?
Actually, Sony and Microsoft already raised prices. Sony raised prices of the PlayStation 5 by 7 to 11% last year, and Microsoft actually raised prices of the Xbox console Series X by about 30%. So I think they already built in some buffer for potential rise in prices for memory chips. And we know that the Sony PlayStation and the Microsoft Xbox are much more powerful hardware, so the requirement for memory chips are probably higher than the Switch 2, so they're probably more affected. But given the price hikes that we saw last year, there's probably a bit of buffer built in already for those two consoles.
But it's not about the money, it's about the games, right? I mean, people buy, if you have a good game, people will buy it no matter what cost. Is there anything in the pipeline for Nintendo?
I mean, Nintendo still owns, few of the world's best-selling game franchises in the world, talking about Mario, talking about Pokemon, and then Animal Crossing. I think Nintendo, the money is in the software. Right now, we are not seeing a strong lineup of first-party games, but who knows what might be in the cards for Nintendo next year, because we know that Nintendo is good at keeping secrets in terms of what is in the lineup of first-party games. So it remains to be seen.
Yeah, I mean, what's the difference? And I know you were telling me that now a lot of people like to also be playing whilst they're on the move. So actually, it probably changes the game of these consoles and how they'll look like in the future.
Yeah, for sure. I mean, Nintendo Switch 2 it's a first of its kind hybrid console, but it definitely has competition from the Steam Deck. Xbox PlayStation 6 series might include a handheld version, and we know that Xbox or Microsoft rather just launched the Xbox ROG Ally, which is a handheld console. But Nintendo occupies a niche of players that likes its first-party franchises, where the Pokemon, Mario, or also more family-friendly games. There's not a lot of violence in a lot of Nintendo's games, which is why we saw Pokemon with guns keep coming out.
Music to mother's ears. Thank you so much, Nathan Naidoo, their equity research analyst at Bloomberg Intelligence. Now, there's a brand new show launching this week. Catch Bloomberg Deals, which premieres tomorrow at 5 p.m. London time with Danny Berger. Up next, it's Bloomberg Brief, and this is Bloomberg.